Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, today we saw the jobs report come out, and it was a stinker. It really wasn't actually that good. Now, at first glance, it didn't appear too bad, but when you really look at the numbers, it was a lot worse than what the market was expecting. Market was expecting about 174,000 jobs added to the economy. The real number was only about 169,000, so less than expected, and actually the whisper number was maybe anticipated to even be higher than 174. So at 169, not a big miss, but really was a lot less than what the market was expecting. Now the unemployment rate actually went down. It was at 7.4, went down to 7.3. The market expected it to remain stable, but it actually went down a little bit. Well, if you really look at the numbers, though, the reason it went down is because, again, the labor force participation rate also went down, meaning less people are out there looking for a job. They just kind of have given up. And the amount of people that could be working is actually at the lowest level since 1978. I was 9, so it's 35 years. So the market, from a jobs standpoint, is not very good. It's actually pretty darn weak. And the bigger surprise is that there were some huge revisions downward to the previous 2 months. 74,000 jobs were actually subtracted from the previous numbers. So they overshot those numbers by about 74,000 jobs over the previous 2 months. So the jobs report was not very good. Now, interest rates are improving on that news. However, up until today, we actually saw interest rates really deteriorate throughout the week. So we really aren't even back to the levels that we started the week out at. So bottom line is that rates are still a little bit worse at the end of this week than at the end of last week. So the interest rate environment is a little bit worse to this Friday compared to last Friday. But we're at least making some of the ground back, because yesterday, in anticipation again of potentially stronger than expected jobs numbers, the market hit the lowest, or interest rates were at the highest level in over 2 years. So we breached some levels of support that could have been pretty scary. We could have seen interest rates really deteriorate. However, this jobs report being weaker than expected caused interest rates to gain back some of the ground and get a little bit better today than where they were yesterday. So next week, we're really going to see a whole lot of focus really on Syria, and then what is the Federal Reserve going to do come the September 18th meeting. This jobs data does not give a whole lot of support to the Federal Reserve about tapering. So stock market actually is rallying today because they think the tapering maybe will continue, that this jobs number wasn't strong enough to really cause the Federal Reserve to say, okay, we really need to start paring down some of the mortgage-backed securities and treasuries that we're buying. But there's also going to be a lot of focus here on Syria and what's going to happen with that. Obama said that he's going to make a real good case on some type of military strike, but Putin said today that they are allies with Syria, and if there's any external attack, they would provide support. So now we kind of see a showdown between United States and potentially Russia. It's not just Syria involved anymore. So that's going to cause some pretty some trepidation in the market, and we could see, if there is a military strike, we could see a little bit of flight to safety and get some support from an interest rate environment and have interest rates get a little bit better for a period of time to see how this all shakes out. So the next big areas of focus is Syria, and also what is the Federal Reserve going to do at their meeting on September 18th. We will keep you informed, but right now we'll just enjoy this little bit of a rally that we're having today to keep interest rates from getting any worse than they already had been. But bottom line, interest rates are great. I would tell clients to take advantage of this little rally and just lock in these fantastically low rates when they can. So we'll keep you informed. Hope you guys are doing great. If you have any questions, please give us a call. If you're working this weekend, so are we. We'll talk to you soon. Bye-bye.